Right, so that's a quick picture of how the numbers look like from the boards this morning. But to even give us a better picture of where we sit now is Jameel Ahmad, who is a VP of Corporate Development and Chief Market Analyst at FXTM, who joins us this morning. Jameel, good morning. Very interesting times, not so much data coming out on the markets today, but let's start off with the performance of the rand and the fact that, yes, despite the performance of the dollar, the rand still sits above the 13 mark.
Thank you very much for having me, firstly, and good morning. So the rand had quite a positive previous week, and now in the middle of last week, it actually touched a high against the dollar, its highest level in about 3 months. But over the past couple of days, the rand slips a little bit lower against the dollar. There's been some marginal losses, and it's crossed that 13 handle once again. Now, what I think this is a little bit of a dollar recovery. The dollar's starting to emerge a little bit stronger after widespread weakness. But I do think that investors are now starting to price in some risk premium, that the likelihood is there that the South African Reserve Bank will be cutting interest rates next week. And if they don't cut it next week, the belief is that the Reserve Bank of South Africa are going to start an easing cycle when it comes to interest rates. Inflation's quite low. That provides the scope for some interest rate cuts. And then you look at the economic performances, there's some need for higher private consumption and lending and borrowing, and lower interest rates will probably ease this case.
Jameel, as a foreign investor, I'm sure you've been paying attention to some of the developments on the political front that have happened since the last time we spoke. I mean, just this week now, we've got rumors of a possible cabinet reshuffle being under the cards. It's a bit of a mess. How are you assessing the situation in South Africa, and what does this mean for the outlook of the rand?
Personally, I believe that the US interest rate direction and the strength of the dollar, or its fluctuations in this case, is going to be the most pivotal factor towards emerging market currency fluctuations. This is the same for the South African rand as well. Quite a lot of risk was priced into the rand a couple of months ago when the currency shot up it shortened very quickly. And I believe that although this political instability and this political risk factor is still there, until the elections happen later this year, it's more likely to be US dollar direction, US interest rate policy, and this domestic front in terms of South Africa probably embracing more interest rate cuts. That's going to be more pivotal towards the near-term fluctuations.
Jameel, we've seen a continued effort by the dollar to recover, and that has been reflected by the sort of numbers you're seeing on the price of gold. But the other factor that is obviously driving this is emerging market currencies. If for an investor willing to put out some money, what emerging currencies would you advise them to look at?
I quite like the Southeast Asian currencies in the emerging markets. And one of the reasons for this is because if we go all the way back to the US election nights and when Donald Trump won the election, the emerging market currencies in Asia come over widespread selling. Some currencies were declining by 3–4% in a matter of days. Now, if we cross forward nearly 1 year gone from then, some of these markets are starting to recover, specifically the Malaysian ringgit and the Chinese yuan. But a major reason why they were sold in the first place was because of these fears of protectionism and the policies that Donald Trump could implement and the consequences they could have on the local economy. We haven't actually seen any developments when it comes to protectionism and these policies actually being implemented. And if you look at the growth factors in these emerging markets, still far stronger than the developed world. They're still performing better than expected in 2017, and I personally still think there's some room for depreciation in these markets.
But then to what extent is that still a possible risk? Because yes, Donald Trump hasn't moved on any of his, or most of his campaign promises, but he hasn't backed off either. We still know that he is a bit against this trade. He still thinks that Asian economies, particularly China, are a bit of a problem for the US in terms of the exports. But yeah, to what extent, if Donald Trump's policies do come to be, I mean, it's a big if, will it be a risk for the Asian currencies that you just mentioned there?
If he is successful at implementing what he promised back in his campaign pledges, then yes, it is a risk. But we've seen now, with Donald Trump being in the office now for nearly 1 year, sorry, not 1 year, for 9 months,
all right,
he's had difficulties actually implementing other factors such as replacing Obamacare. We've just had this situation with the debt ceiling, and it looks like there's going to be a 3-month extension. And most of the headlines right now coming out of the United States is political risk from within the White House, a few reshuffles, and actually the geopolitics with North Korea. And it looks like this is what Donald Trump's really focusing on right now, and he's going to face some difficulties to push through these pledges. Even with the tax reforms, yes, it'll be good for growth, but it's also going to be bad for debt. And this is why I think there's going to be some sort of negotiations are going to have to take place, and I do not think Donald Trump is going to be able to implement these reforms when it comes to legislation as quickly as he would have hoped.
And talking about North Korea, so we've seen that investors are feeling a little bit less risky about a full-blown war breaking out now. But yesterday, the UN, I understand, put in tougher sanctions against North Korea. But how are you assessing that situation now? Has risk completely subsided of a US and North Korea full blowout?
I don't necessarily think so, and I don't think that investors can afford to ignore the risk between North Korea and the United States, not in terms of military action, but just because the tensions are brewing, and they're still there. These tensions are nothing new, but the markets were spooked with Donald Trump's words last month about fighting with fire and fury, and North Korea is clearly not backing down when it comes to wanting to test its nuclear missile program. Only yesterday we saw those headlines that North Korea promised that the United States might meet some of its greatest pains, and there was quite a sharp reaction to the sanctions being took in place. You can see that investors, although we're seeing more risk appetite towards the US equity markets, investors are still hedging their positions against many different unknowns. And geopolitics with the United States is just one of those factors. You look at gold, and it's still very much moving forward, and we believe that as long as that $1,300 support is going to be in place, gold can still progress even further this year.
Jameel, on the boards this morning, we saw slight pressure coming on the FTSE 100 index. We also have the Bank of England making its rate decision later on this week. What is your outlook on this?
Now, begin with the FTSE. We've seen quite a correlation over the past year now that when the pound gains, the FTSE falls. And we had a huge rebound in the British pound yesterday following that UK inflation data, which is why we put the Bank of England into forward of mind now. Inflation is increasing in the United Kingdom, and there are inflationary risks. And the Bank of England have previously commented that if price pressures increase, there could be the possibility that more members of the Monetary Policy Committee could vote for a rate increase. I don't think that it's likely there will be a change in policy rates tomorrow, but there is a possibility that there will be more dissenters joining the MPC committee, and the Bank of England really faces a problem here, because you've got so much uncertainty for the Brexit and the EU referendum outcome. Nobody really knows what the impact is going to be on the UK economy, but you've got these very high inflationary pressures. The UK is now the weakest economy in the G7, which means that lower interest rates are probably going to be more beneficial. So are the Bank of England willing to see these high inflation pressures in order to keep low interest rates? We don't know quite yet, but this is what we need to be asked and answered tomorrow morning.
And then what about the euro? So we're very happy because we track the euro and its gains have reflected in our gains on the rand. But what's the outlook there for the euro?
I still think the euro can gain somewhat more in 2017.
Beyond the 15% that it's gained, right?
Beyond the 15%. And one of the reasons for this is because investors are very unconvinced when it comes to the dollar. And one of the correlations we've seen in the past is when the dollar weakens, it's very positive for the euro. I also think that traders are going to price in as much good news into Europe as they possibly can when it comes to European Central Bank. Don't get me wrong, they're going to be in no hurry to move interest rates, and they're clearly in no hurry to scale back from QE. But it's not going to stop investors from pricing in the inevitability that eventually the ECB will have to turn more positive on their economy. And we saw this in the past with Donald Trump as well. When Donald Trump won the election, investors priced in so much good news into the dollar. And they priced in before it even happened. The same is going to happen to the euro now, and we just believe it's becoming full circle.
So more good news for the euro, more good news for the rand?
It's possible. I believe that the near-term risk is going to be the lower interest rate outlook, but over the future, one of the benefits of low interest rates is that it's going to stop these investors chasing yield. Because this is one of the things that makes the rand very volatile. If investors are chasing yield, the rand moves, it can move in either direction. But if there are lower interest rates, investors will be chasing yield in places like Turkey and these higher interest rate economies, because South Africa is probably going to begin an easing bias.
Well, Jameel, it's always great having you in studio when you're with us. Do join us again when you come to town. That was Jameel Ahmad, who is the or VP rather, of Corporate Development and Chief Market Analyst at FXTM. Going into a